My options trading portfolio just cracked $330,000, and I was recently assigned 600 shares of Amazon inside that portfolio. And before this video is over, I'm going to tell you exactly what I plan to do with those 600 shares of Amazon and what I'm planning to do to make myself a little bit more money. And if you saw my last video, you would know that I bought an extra 85 shares while I was waiting to get assigned those put options for Amazon. I bought those 85 shares to improve my cost basis on the overall price of the shares. And right now, as you can see on the screen here, I basically have 685 shares of Amazon for an average price of $221.76. When the market opens on Monday this coming week, I'm gonna buy another 15 shares of Amazon. Doesn't matter what the price is. I'm gonna buy another 15 shares so I can have a total of 700 shares in this options trading portfolio. And the goal for that is pretty simple. With 700 shares, I'm able to trade 7 covered call options on this account. All right, so enough about this portfolio. The main reason that we're doing today's video here today is to talk about the update on the little portfolio that we started on this channel about 2 months ago, the money printer portfolio. This is the portfolio that I started with Fidelity, and this is the portfolio that we're gonna track on this channel from $0 all the way to $1 million. And I get it, that's not gonna happen overnight. That is gonna take a little bit of time, but these are the real numbers, guys. This is what it takes the average person, like a regular dude with a regular job. This is what you're going to go through to build that portfolio. And it's grown a little bit, you can say, or I guess you can say it's doubled since the last time we did one of these videos. But let's jump right in and let's cover some of the numbers and what I've been doing in the portfolio. And again, guys, not that long ago, this portfolio started off with just a couple $100. As a matter of fact, this was about 2 months ago. And we started doing it live here on this channel. And now it's pretty close to $5,000. And what's the goal with this portfolio? The goal is to get this portfolio upwards towards $1 million so it could pay me dividends consistently for the rest of my life. Right now, this little portfolio is sitting just north of $4,980. And for the most part, since the last video, I've pretty much been focusing on building my position with SCHD. And I've also been adding a little bit to the growth piece in here, Google, Apple, and Meta. And I plan to balance it out a little bit more by adding to my positions with VU and the Triple Q. And I really don't plan on adding any more companies to this portfolio until I grow these positions a little more significantly. I've mentioned this in previous videos. I don't think it's a good idea to have a portfolio with 10, 15, 20 companies that each company has like $30, $80, $115. That's no good. You're better off focusing on a smaller batch of companies and adding more money significantly to those companies. So when you do get paid a dividend, that dividend packs a little bit more of a punch and you're able to reinvest that into your portfolio and get your dividend snowball growing a little bit quicker. So right now with SCHD, my main position in this portfolio, I have a little over 87 shares with them. The cool thing about Fidelity, you're able to buy fractional shares. So let's say you didn't have $26, right, to buy a full share of SCHD. You can put $20 into it and it'll give you fractional shares of the current price of that company. And going over into Snowball Analytics, it looks like SCHD will be paying their dividend on September 30th. And as you can see right now, I'm not going to be making a lot of money. I don't have that much money in this. We just started building this portfolio out. It's only the third review, right? This is the third review on this thing. So we're a couple months into it, right? Right now, I'm going to collect $22.07. It's not much. The goal is to get those $22 and reinvest them back into the portfolio so we can start to compound our growth here and we can start building that snowball to get bigger and bigger every month. The second biggest position in this portfolio is one of my favorite stocks to invest in is Google. Ticker symbol GOOGL. With Google, I have 4.8 shares in here and I have almost $1,000 invested in the company. And right now, if they were to pay me a dividend, it looks like it's going to be on September 15th. The dividend is going to be $1.01 to be exact. And again, this is not much money, but I do plan on growing this over the months. And obviously, right now, when you start a portfolio, guys, you have to come to the realization and you have to understand that when you first start this thing, you're not going to make a lot of money. And this is what gets kind of discouraging, right? People get discouraged. You're going to be in this for 5, 6, 7, 10 months, and you're not going to be making a lot of money, but that's normal. That is the price that you pay. It takes a little bit of time to get this train moving. But once this thing gets moving, man, you're going to start getting some pretty juicy dividends. And those really start to add up pretty quick. Once you start compounding $60, $70, $80, $100 dividends, you start to see the growth in your portfolio accelerate a lot quicker. All right, so my third biggest position in this portfolio right now is Meta. I have just less than a share of Meta, almost 1 share. It's sitting at about $750. And if Meta were to pay me a dividend right now, it would be 51 cents. Oh, it's quite comical, man. But you know, you got to go through this embarrassment, right? You got to go through the embarrassment of collecting these little tiny dividends once again in order to reap the benefits in the long term. So it is what it is. You guys could, you could shit on me and laugh at me in the comments like, oh, you got a 51 cent dividend. That's fine. We'll talk at the end of 2026 and see how it's going. So next up on the list is Apple. Apple's my fourth biggest position in my portfolio. And if you didn't know, Apple completely skyrocketed this last week in the market. They came out with some news that they're going to start building stuff here in the US. They're going to open up a warehouse, a ginormous plant in Kentucky, I believe. And the stock ran to the races, right? It took off like a rocket ship. So, I mean, it's up pretty significantly now, which is a bummer because I was planning on buying more shares in like the $200 range. But, you know, I'm just going to keep dollar cost averaging my position and just go from there. But anyway, right now I have 2.2 shares of Apple, and the position is currently sitting a little bit over $500. And right now, Apple is expected to pay their dividend on August 14th. So I will be collecting a fat, chunky dividend of 58 cents. I don't want to say that too loud. I'll be collecting 58 cents from Apple for my whole 2.2 shares. Oh man, I can't wait till like a year goes by and all these positions are a lot bigger and I can go back and just laugh at myself by watching these videos. But it is what it is, man. This is the cost of building a brand new portfolio, but here we go. The next biggest position here, guys, is going to be my VOO position, my VOO, basically the S&P 500 version of Vanguard. I really got to add a lot more to this position, to be honest. This is pretty embarrassing. I only have $220 in VOO. Doesn't even give me half a share, but I am going to grow this over the next month or so. I'm going to focus more on this position. It'll probably be VOO and SCHD that I'm going to start targeting a little bit more. But with VOO right now, if I were to get paid a dividend with VOO, they're looking like they're going to be paying in the month of October. So yeah, October 1st, VOO's going to pay their dividend. And right now with what I have in this ETF, I'm looking to collect a 62-cent dividend. So their dividend yield right now is about a 1.18, almost a 1.2%. So it's not much. It is a lower dividend yield, but it is a great ETF to own. You instantly diversify your portfolio by owning shares in this ETF. And then my sixth position in this portfolio is the Triple Q. This is another ETF, very heavily weighed into the tech sector. And then as like VOO did, the Triple Q is going to pay dividends in October 31st. It looks like they're going to pay dividends. So with Triple Q, I only have a third of a share. I also need to add to this, obviously. And it's close to $200 invested in this ETF. So as you can see, guys, this portfolio is about $5,000. And even though some people might think, oh man, $5,000 to invest, you know, I don't have $500. It doesn't matter. Just get started because little by little it adds up. I started this thing with a couple $100, and here we are in the third review of this portfolio, right? The third review, like I guess you could say the third episode of this little series that I'm doing here. And it's already at $5,000. So I'm expecting this thing to be upwards of 10 grand by the end of the year. I'm just going to continue adding money into this thing. I'm going to continue dollar cost averaging, especially when the market gives me a red day. When the market gives me a red day, I try to take advantage of it. If I put normally 150, 200 bucks into this thing, if I get a red day in the market, I'll put 350, 400, 500 bucks. But with that being said, I'm just going to continue to dollar cost average to grow these positions over time. And with that being said, going back to my options trading portfolio, guys, if you're not subscribed to the channel, do me a favor, subscribe to the channel. I am trying to get that portfolio over there to 500K. And right now I have 700 shares. Well, I have 685 shares of Amazon, but I'm going to have 700 shares here pretty soon. Once the market opens on Monday, I'm going to buy those 15 shares like I mentioned earlier, just to be able to sell that 7th contract on Amazon. I feel like if I'm able to sell 7 covered calls on Amazon, I will be able to sell them further out of the money to get some good share appreciation out of the shares as well if they do get called away. But I'll also be able to collect a pretty juicy premium because you're not doing 3 contracts, you're not doing 4 or 5, you're doing 7. So 7 contracts, even if I get them at $1 a pop, that's $700 a week I can do there by selling those covered calls. So that's pretty much it, guys. I wanted to give you guys a quick little update on that little money printer portfolio. And I wanted to give you guys a little bit of an update on my shares with Amazon. And if you enjoy this type of content, just do me a favor, smash the thumbs up button. And if you're not subscribed to the channel, subscribe. Come along for the journey. You could probably get some ideas off of me building this portfolio. Just remember, I'm not a financial advisor. This is not financial advice. I'm just a regular dude, just like you, trying to make it in this expensive ass world that we live in currently. So that's the reason why I'm trying to build this portfolio, right? We all want to make some passive income so we could buy ourselves our time. The goal is to buy your time back. Yeah, it's cool to own, you know, some nice cars, have a couple cool toys, live in a nice house. But the main thing is you want to buy back time. If you can buy back time, that is the true game, guys. That's the win. That's the W. If I don't have to go to work and I can still make 10, 12, 15 grand a month, that's where you win. You can buy back your time. So anyways, with that being said, guys, I just want to say thank you for coming along and hanging out with me for a couple minutes. If you have any questions, comments, or concerns, as always, drop them down in the comment section below. I will jump in there, and as ridiculous as some of those comments are, I will do my best to reply to all of you. So with that being said, I will see you on the next one. Peace.